Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Tuesday, June the 7th, 2016, and we are looking at the Dow Jones Industrial Average just settling about a half hour ago, up about 18 points on the day, 17,938, but just shy of that elusive 18,000, intraday high 18,003. So we were able to see the market breach that price point, but not sustain it. And it's not sustaining it that really is as important as the fact that it did close higher on the day. S&P's closing up, currently trading at 2110.25, putting it up about 2 points. Of course, we entered a long position in the Standard & Poor's. This is the E-mini, and it is precisely at the entry point of where we got in yesterday. So in essence, unchanged on the day, even though it's showing us up 1.75 or 2 points on the day. So here we are, June the 7th, 2016, and for the second time this year, we have seen the Dow Jones Industrial Average trade above 18,000. That's this price point here. Of course, last time we saw that, we were looking at a rally which began mid-February from these lows down here in the Dow Jones Industrial Average, so call it 15,500, all the way up to 18,200, matching some highs that we saw last year, but not our record high, which sits right in here above 18,200. I believe this is our all-time record high in the Dow Jones Industrial Average. Now, we had a reasonable retracement, and the retracement itself was more than a 23 and less than a 38. So in terms of the amount, it was okay, but in terms of where it landed, really the logical point that I was looking at was at around 17,200, but the market did recoup and it did make it higher, which takes us to the Standard & Poor's and our current trade. So traders, we are looking at a daily chart, Standard & Poor's 500, and we certainly had a higher high today. And I think that that is something that we certainly want to take note of, but that high comes just under what I've earmarked as our current area of resistance, which sits at around 2120 to 2122. It's this dashed line here. Once I compress the chart, you'll see where that comes to. But we certainly closed at roughly the same area as we closed yesterday. And the key was, as far as I'm concerned, when I watched this market today, that we were unable to really sustain those highs. That's a little worrisome, but I still believe that we have some real opportunities to see this market move to new highs that we haven't seen at least this year. Now, I've drawn a line, and that line comes across these tops here. And this, of course, to me, is that critical area on a technical basis that we absolutely want to see the Standard & Poor's 500 continue to trade above. My recommendation, obviously, maintain our current long position at 2110, market currently trading at 2110.25. Maintain your current stop, which is sitting below 2080. Dollar continues to trade under pressure, although very light trading in terms of the range today, currently trading at 93.88. When we look at the index, you can see that after last week's dramatic fall from grace, in which it broke well below this 95.34 level. Of course, these are different fib levels for support and resistance. This market continues to trade with a lower low on the week and a lower high on the week, although we haven't really seen that much movement. It is Tuesday, but as you can see, the trading range between where it opened on Monday and where it closed today is extremely narrow, almost a doji, or the open and close are at the same price. The same cannot be said for crude oil. And traders, today crude oil traded substantially higher, although it was only up 66 cents per barrel, or a 1.33% gain. The key was the level that it broke through, which was the fact that it closed above $50 per ounce to close at $50.36. That's where it's currently trading at. When we take a look at the market here, we have not seen this market have this high this year. This is a recent high for the year. The last time we saw oil trading at this point was just prior to its massive fall from grace, that coming really at the beginning of October last year, trading to this low of about $26 per barrel. And traders, we have seen crude oil rise about 91% since we saw it form that W and begin on this upward trajectory. Now, we talked about the fact yesterday that what we have noticed was the fact that oil tends to trade within this cascading channel line from our highs to our lows. And if that is true, we could see it move back to these highs before hitting some headwinds and move lower. Those highs would come in roughly at about 51.75, and then we should see it track lower. I believe that we're at the upper level or the upper area of where this market will trade to. I do not think we're going to see it exceed these highs that we saw in October, but I am quite frankly surprised that the market has actually moved up past 50. So I could easily be wrong on this call, but at least for now, I think that's where we'll find resistance. I do think that there's a little bit more upside just in terms of a technical basis by looking at this particular channel that crude oil has been trading in. As I said, maintain your current long position in the Standard & Poor's 500. Maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.